Hello, YouTube. A big move is coming. The coil is getting tight, and we're either going to go up or down. I believe the catalyst for the next big move is going to be Payroll Friday. And I say that because if we now look here to our 1 hour chart, we have gone a whole bunch of nowhere, roughly 387 down here to roughly 376. We haven't really done anything. We had a big, nasty move down, and now we're going sideways. And I don't think the bulls are receptive to what is here. Why? When we delete everything, what is very obvious to me? Well, we have a head and shoulders pattern. Okay, cool. Bearish. Well, it's bullish this time, Justin, because of XYZ. Please make sure to drop me a comment and tell me what you think. As you are smashing the thumbs up, is the head and shoulders below key averages, bullish or bearish? Riddle me this. I would really appreciate it. We're below the 200. We're below the 50. We have a bearish pattern, and we have no real reason why we want to be overly excited. We're stuck going sideways. So even if we're truly going to go higher, when moon? Well, before we moon, we got to reclaim the 50, we got to reclaim the 200, and we got to stair step higher. If tomorrow is the day, I'm going to be very surprised. I think tomorrow is going to be more of the same. We had Joel's job openings with a green number. That is bearish for stocks. ADP non-farm payroll, it's green. Initial jobless claims, it's also green. Bearish, bearish, bearish. So bearish data, bearish pattern, bearish below averages. I don't really understand what the bulls are seeing. I think it might be a little bit naive, and I think I know the reason why. I'll share it with you. So the adage of don't fight the Fed is one thing people remember, but these are in cycles, which means they don't always happen frequently. The other adage is BTFD, right? Buy the dip. So BTFD. That's what I think these bulls are really focused on here. BTFD, right? Especially the F part, F the bears. So I think, again, I think that is what's largely driving the sideways action here, where we're all waiting for the blank. And because the Fed has explicitly told us that they have a dual mandate and they have to really focus on the inflation part right now. Jobs are really strong. Look, more job openings. That is bad. More people gaining jobs, 235 versus 150. ADP has not always been accurate. Let's take it with a grain of salt. Initial jobless claims is down, though. So everything points to tomorrow not being the number we want to see. If unemployment rate stays sticky at 3.7, doesn't come lower, go higher, and we get 200,000 jobs, I think that's going to be received in a bearish manner. What we want to ask ourselves is whether or not there's already been enough blood going here from the high we established in December at roughly 410 all the way down here to about 380. And I think, again, I think that it might not be enough. Why? Let's have a look here at Tesla. Why? Well, I think it's important for us to understand that the stock that has had the worst week, the worst month, the worst year, the biggest net worth decline for Elon Musk of $200 billion, right? Making records. The guy loves to be number one. And we're down by 10.42% on the week. Elon would be proud. There's a 42 in there. I'm only joking because even with all of this record downside, it wasn't enough. A small miss, again, relative to what they delivered. They delivered a record quarter for deliveries. It wasn't enough. Stock got punished, down another 10.42% as we are sitting right here. It also went back below the weekly low, the monthly low, and the annual low earlier this week. We look here at a 12-month chart, and what do we got? Lower high, lower low. Oh my goodness, this doesn't look good. The next shelf of supply or demand here, it's about 75% lower based on this annual chart. Is that where we're going to go? It's not a guarantee, but that's where I see support on an annual chart. And when we now look back to the S&P, well, there's still some to give back here. We note that we're now back. We're right here on the 2020 high. The high here is 378.46. We're sitting right here and at the close at 379.38, and our low of the day today, 378.76. It's almost like if we zoom out and we forget what the ticker symbol is, we can abstractly look at the chart and ask ourselves whether or not this is bullish or bearish. And I heard a resounding, these charts are bearish on our Friday stream. So why are we fighting this? That's what I don't understand. Looking here at QQQ, we're down by 1.7 on the year, right? Doesn't look bullish to me. We're about to lose last year's low at 254.26. I'm going to look at one more chart, and then we're going to go through a little bit of a story, and then we're going to look at some more charts and wrap it up. One more time, please, and thank you. If you could smash that thumbs up, I would greatly appreciate it. Let's go. Looking here at Apple, the king. The king Yearly lower low, below the 2022 high. Sorry, below the 2020 high, below the 2021 low, and it's down by 3.78% on the week. What you might not realize is that that's about $75 billion. That's right, $75 billion for a roughly 4% decline. Why? The company is worth about $2 trillion right now. And where Apple goes, the market goes. So if we're below averages on Tesla pierced it, reclaiming it right now, but Apple is the market. What are we doing? Well, that's exactly my question. What are we doing? When we look here to a year-to-date heat map, Microsoft down by 8.5. One of the last soldiers, well, pew, right? It got a shot in its armor. Google down 4, Apple down 4, Amazon down 3. Even with layoffs, it's like, cool. More red. Tesla down by 7. There's no real pockets here that give us, other than communication services, there's nothing here which really gives us a strong theme of what's working. Consumer services, people want to buy value and not growth. So let's go through a few more things. Then we're going to look at charts because there are actually some winners and some losers in here. So the winners right now are equal weight S&P, NYSE, China, and emerging markets. That's pretty much it in financials. We'll look through those in a moment. But before we go further, as I just want to give a preview here, I don't know what the number is going to come out as tomorrow. I know it's probably going to be in line with what we saw here. So what do we get? 500,000 more jobs added. As what? As the Fed is saying, we don't want people to have jobs. They need to lose them for us to loosen. All right. ADP non-farm payroll. Not that this is going to be the end-all be-all, but 235 divided by 150 means we had a 56% beat on jobs added, not job openings, on jobs added. Initial jobless claims missed by 10%. You also are going to note that here that the ADP non-farm payroll for the previous report got revised up. It's which is why it's green. Previous number here for JOLTS openings, it's green. Previous one for initial jobless claims, it's green. Everything's being revised up. Why would it be different for tomorrow? Like I said, the question is whether or not, like Tesla, there has been enough pain delivered to deflate it and to have people be like, okay, well, came in line. Sell the hype, buy the news. That's what we're looking for. So it all comes down to 8:30 a.m. tomorrow. And if you're looking for someone to trade with, well, as we told you before, you can join us for a 14-day free trial by going to thealgo.com. And you can see specifically how I, Justin from YouTube, am positioned for this, how I plan to make money, and maybe what you can look for to try to get a little bit of an edge. Otherwise, I believe that the bulls are not only delivering a free meal to the bears, they are doing all the work. They're literally jumping right up into the mouth. They're making it so easy. This is a juicy meal. Why would they say no? People are ready, willing, and able to BTFD when it should be WTF. Why are we fighting the Fed? I'm literally giving this guy his meal, and I'm not even making him work for it. Why? I don't know. So if things did not work out for you in the last year, or maybe even longer, or maybe even shorter, insanity is doing the same thing over and over and expecting different results. So with a fresh year, with nothing really changing, the Fed coming out and telling us today, what are you guys doing? If stocks go up, we have to tighten more. Cut it out already. Stop making stocks go up. So we don't have to raise rates even higher. That's what they're saying. Cut it out. Stop fighting us. We're going to do it. Stop being insane. It's never worked before. We've had a 100% hit ratio. When you fight us, boom, right in the kisser. Why is this time going to be different? I don't know. So Esther George, and Bullard spoke today too. That guy's a really notable hawk. But anyways, she's on her way out, right? Esther George, she's been at the Fed for 40 years. What's she telling us? My terminal Fed rate outlook is above 5% and staying there for some time. All right, some time. Here's what the Fed rate outlook is right now. We're peaking out in June, and we start cutting into the second half of the year. It doesn't matter whether it's accurate or not. What matters is that the market is fighting the Fed. The bond market's fighting the Fed. The stock market's fighting the Fed. Let's see if it works out well. I don't know how it will. If we look here to our options flow as well, we're looking at orders over 100,000. Specifically, the largest orders coming in are pretty big and juicy. There are hundreds of, that's actually exclude Apple. Let's go all premium. And we're going to note here that we have a 1.6 put call ratio, or basically two puts bought for every one call bought. Wow. Let's look and see what those numbers are. Okay, let's look here to the overall. Tesla, 2.7 billion short just this week, 100 million long. Amazon, 800 million. Apple, 507 million. Baba, 500 million. There's very little calls being bought. I don't really understand what the bulls are thinking. And with the all this put buying, in addition to what we saw before, we know that a lot of it expires on when? On the 20th of January. These bears are ready, willing, and able to create the dip and then just have their nice little fresh meal. You guys are ready, willing, and able to give it to them. They're going to say, thank you. Look forward to seeing you on next expiry. I don't understand. Next thing we can also look at just really fast is we talked about this before. We'll look at SPY. We'll look at Apple. We'll look at a couple of charts and we'll sign off. So 380, 382, and 380.87 here. We talked about this before. These are the dark pool prints with a lot of volume transacting. What does it mean? If SPY is below that area, which it is right now, it's going to act as resistance. We're below all of it. So everyone who bought this is red. Billions of dollars, right? Billions of dollars are currently red. All right, cool. Let's look at Apple. So Apple on our levels, what do we got? Well, we got 125.07, 126.36. And I'm focusing on Apple because it is the largest stock. This is a new tool that we're trying to give some value to. Where are we right now? 125.02 at the close, 125.1 in after hours. If tomorrow is more of the same, meaning more down, this is going to act as resistance. It's not like the end-all be-all. Oh, but we're below dark pool prints. No, it's just a data point. But everything, I'm talking literally everything, tells me we have to at least be aware that if we're trading the S&P 500, we have to understand what is inside the S&P 500. We can also note math is a play here. 379.23. What is that? Oh my goodness, that's the 0.236 Fibonacci retracement. Yes, it is. Did you know that? Can you riddle me that? If you can't, please riddle it now. Why? The next stop in terms of the math is a retrace of the yearly low at 348.11. That's about 30 points, 40 points lower from where we are right now. Are you ready for that? If not, stop being insane. Make a plan. Maybe make a change to your strategy. So with everything telling us it's time to go down for the S&P 500 or the basket of 500, we looked at the heat map. It's red everywhere. Looking at QQQ, we're going to have an unbelievable pump tomorrow. And I am hoping, I am praying the bulls can do it. But is an 9% rally reeling the cards in a single day? I think that would be a record ever for a single day and even for a single week. Actually, no, we did a 12% back here. In a single day, I would be extremely surprised if that happened. We're set for our fourth consecutive weekly close below the 200 of May. Death cross is forming, not quite formed. And we look here to what is working, the dollar. It's up by 1.6. Man, big pivot over the 50. It's looking strong. Looking here at VIX, up by 3.6 on the week, down from where it opened. It's trending up. It's still in a range though, just like the S&P has been. 2-year note, it's an up week. 3 weeks in a row. The bond market is starting to stop fighting the Fed. It is going higher. Really notable. 10-year note, still very elevated. Still up by about, as we sit right here, about 7% off a low from about 2 weeks ago. But it's coming down this week, which means long-term inflation expectations are coming down. But on the day, on this payroll numbers, it's all green here. If we now look across to a few more assets, every trillion-dollar company red, no need to look at them. Apple and Tesla are the best ones. Why? Apple's the big dog. Tesla's for sentiment. Then we look further down here. Let's look at these weekly charts here for the Dow. Red, but over the 50. All right. RSP, green. That's right. Equal weight. S&P 500 is green, which means the average stock equal weight in the S&P is actually going higher. It's those tech companies that are really the trouble here. NYA, green, or 2,000 stocks, collectively green. Looking at IWM, red, down by 0.4. Back to where? Back to 2018 and 2020 highs. 2018, 2020 highs. That's a green line. All right, cool. Looking here to XLF, green by 1.2. Nice. Why? Defensive. Value, XLE, red. Energies, red. Utilities, red. XLK, red. Red on the 200 weekly. ARC, red. FXI, big green, 10%, which means people are not selling all stocks. They're rotating to where money gets made. They're selling U.S. tech, buying Chinese tech. It's obvious to me. Is it obvious to you? And then emerging markets up by 3.56% on the week. So with that said, I really hope and pray, using those words intentionally, that the bulls can deliver a positive reaction tomorrow. If not, I think the slide is going to continue. Is it going to be a water slide? Is it going to be a drip? I don't know. But with that said, I wish you all the best of luck. And if you want to tune in for the final hour tomorrow, come hang out with me, Justin from YouTube, for the final hour, where we're going to give you the walkthrough for the final hour and tell you exactly how the market's shaking out. If not, please take some time to reflect today so you're not caught offside tomorrow. Thank you for watching. Look forward to seeing you tomorrow. Thank you.